investing in us, you're investing in a transparent, responsible, environmentally and socially conscious developer, owner, operator of multifamily assets.
Joining me today is Mahbod Nia, CEO of Veris Residential. What sort of operating fundamentals is Veris seeing in multifamily residential right now, and how is this shaping its long-term strategy?
We're seeing very strong operating fundamentals really across the board, a real resurgence in occupancy since the trough of COVID. In our portfolio, we've seen 20% same-store NOI growth in the first quarter of this year on a year-over-year basis, a 16% blended net rental growth rate as well. So it's been extremely strong, and our latest development, House 25, which is a 750-unit apartment building in Jersey City, I think is further testament to that strength and the quality of the assets that we've got, where we've seen now leasing reach close to 50% in around about 8 weeks since 8 weeks of opening. So continue to be very strong, and for us the strength we're seeing in multifamily further gives us conviction that our strategy that we adopted now some 18 months ago to fully focus on that and pivot to being a pure play multifamily REIT is the right one.
How would you describe leasing and pricing momentum across Veris's portfolio, particularly as we emerge from the pandemic?
Yeah, as I said, it's been extremely strong. So we've had around about 16% blended net rental growth in the first quarter across our portfolio. House 25, the lease-up property that we commenced leasing 8 weeks ago that I mentioned, we very quickly recognized that the demand way outstripped supply, particularly for that high-quality product, and began to taper back concessions to almost non-existent and also increased rents to the point where we're now significantly ahead of expectations in terms of velocity of leasing and in terms of the net rents that we're achieving, both relative to our own internal budgets and market expectation.
How has Veris positioned its balance sheet to cope with a rising rate environment and also to support its new strategic direction?
Well, we actually last year took steps to reshape our portfolio, streamline, and begin to focus on multifamily, and in doing so, sold over $1 billion of non-strategic, primarily office assets, used those proceeds to repay unsecured corporate debt and significantly delever and de-risk our balance sheet. So today, really, the majority of the debt that we have is senior secured mortgage debt secured against our multifamily portfolio. It's long dated. We take measures to ensure that we stagger maturities so there's no concentration risk, and 70% of it is actually fixed rate.
As you meet with investors this week, what are 3 top reasons you're giving them to invest in Veris Residential?
So I think the first one would be investing in us, you're investing in a transparent, responsible, environmentally and socially conscious developer, owner, operator of multifamily assets with the highest quality properties, the youngest vintage, average age 6 years, and overlaid on top of that, that also, by the way, attract the highest rents across the market, given the quality of the assets and the amenity offering. Overlaid on top of that, a phenomenal platform that we've equipped with the best people, processes, and equipped them with the technologies to manage what is a best-in-class vertically integrated multifamily platform now. And the third reason I would give is with a company like ours that's in transformation. When I took over beginning of last year, we were 38% multifamily. Pro forma for sales, acquisitions, and the stabilization of our one development, House 25, that I mentioned, we're now north of 80%. And so unlike stabilized companies where you're really buying into a trend of where rents go, where rates go, with us, we really have the potential to be able to generate outsized returns as we conclude our transformation and create value for shareholders in the process.